Counter Range Theory Trader, trade review for today on GU. So first I'm going to refresh our memory with the pattern. This was a daily continuation trade. So this is the general pattern that I was looking for on the daily chart. Okay, so you have 1, 2, 3 strong closes to the low. And then you get what I like to call the money candle on the daily chart that goes below this range's low, then closes back inside of it. My goal is to just simply enter on this trading day right here and hope that the range completes. Now, I didn't do that, but I still got a decent return for the day. So now we go to a real chart and see what GU did for today. So this right here is the daily chart on GU. You have 1, 2, 3 closes, the money candle that goes below this candle's ranges, close it back inside of it. This was Friday's price action. Today is Monday. So I had a long bias going into the week. And so it didn't go up that far. Obviously, it came nowhere near the range high. But because of the amount of entries that I took, I still managed to get a decent return on it. They're very thankful for that. So let's take a look at the entry on this continuation trade. So we go down to our 5-minute chart. There was news at 10 a.m. Eastern Standard Time for the US dollar. And that's when the move came. So I had a couple of losses on this one. I think I got in. I started taking it, I think, early USA session or so. Or no, late London session. Probably like back here or so when it was close to the middle of the range. But either way, those were stop outs. But my first entry was right here on this swing low. Let me make this a little bigger. There we go. Okay, so this right here was the low of the day. This was approaching the 10 o'clock news when that was coming out. So you had the low, then the lower low. And the reason I entered right here, and then the swing low came right here, the higher low right here. So 1, 2, 3. But you'll see this gold box that comes from this swing low right here, which took place on Friday. So really, I based it off the Friday swing low, where you had. Let me make this bigger. You had a low, the money candle for that day, with this candle created the low of the day on Friday, and the higher low. So kind of a very much lopsided swing low, but this is where it was right here. So what I like to do is I draw a box around the 3 candles that make the swing low that create the high of the day. And I say that's pretty much my trading zone. That's like bare bones. So if this low didn't hold, I would have had to get out. But so obviously a good place to take a trade would have been right here on Friday, because that low I think held or got teased a little bit. And as you see, price just revisited it right here. So I took the first entry here at 9:50 or so, and at 9:55 I think I took a few more, and then I took a few more once the 10 o'clock hour hit and just scaled in a little bit. So I had like 4 entries total, and I got 1 to 3 on the base entry and a few others. So once my profit was hit, like I said, it was like 1 to 3. So let's see, I did a 10 pip stop loss, so I probably got out around. Let me do this. That's the 10 pip. So maybe around there or so, roughly, Again, type stop loss. I always prefer 10 pip stop losses. So, as you can see, the low of the day held, price spiked up, retraced a little bit, and then spiked up again. So that was pretty much it. Easy trade. That was the only trade. This was the only pair I followed and traded for the day. So I'm going to look for the next one. But again, this was a daily continuation trade based off of this pattern right here, looking for this type of price action. So that's it. Just keeping it simple. We'll see you on the next video. Appreciate you watching, and have a great rest of your day.